Welcome grade 12s. Yes, learn extra with Ashraf Patel, and the focus in today's lesson will be, you guessed right, balance sheet and the cash flow statement. But what concepts are we discussing? We're looking at, the focus would be on transactions involving shares and how these affect the balance sheet, remember, and the cash flow statement, with specific reference to the buyback of shares as well. So if you want to know more about this place to be is with us. And now focus and pay attention. So we start off with an explanation, and we say that what is the format of the statement when we're talking about the statement of financial position. Just to remind you that the other name for it is the balance sheet. It's now called the statement of financial position. So you know exactly what am I referring to. When we look at our note, the note is important. Why? Because we start off with the authorized. Now look at the note. The authorized simply states the number of authorized ordinary shares, and that is 500,000. No value whatsoever. All that it states is the number of authorized ordinary shares. Once again, that's the total number that the company has been authorized with in the memorandum of incorporation. Okay, now coming to the issued. You start off with your 300,000 shares in issue at the beginning of the year. Okay, now that all that it gives you is the number of shares and the value of these shares. So clearly you can see that if you want to work out the value at which these shares were issued, all that you do is you take your 1,500,000 and divide it by 300,000, and that will then give you the value of your shares, which will be 5 Rand. So those shares were issued at 5 Rand. Okay, now, during the year, what happened? During the year, we had a further issue of shares. Notice, 200,000 shares. And these 200,000 shares were issued at 7 Rand per share, thereby giving you a value of 1,400,000. So clearly you can see that these shares were sold at a different price. And these shares were sold at 7 Rand per share. When did that take place? During the financial period. Now we're coming to something very important. We also repurchased 80,000 shares from our shareholders. Why would this happen? Maybe it's from an insolvent estate, or from an estate of somebody that has passed on, or it may just be a shareholder who's disinterested in the company and wants the company to repurchase those shares. Now this is critical. Let's go back and work out something of importance. If we say we had a total value of the shares which was the 1,500,000, 1,500,000 plus the further shares that were issued to the value of 1,400,000, okay, to give me a total value of 2,900,000. That's the value, the Rand value of those shares. Now, let's divide it by. What are we going to divide it by? We're going to divide it by the number of shares that are represented by that value. And the number of shares, as you can clearly see here, is the 500,000. So, if we divide that by 500,000 to give me a value of 5 Rand and 80 cents. What is that 5 Rand and 80 cents? Grade 12s, listen carefully. The 5 Rand and 80 cents is the average issue price of the shares. And therefore, when you are working with the repurchase of shares under my note, which note am I referring to? Under my note where it deals with the ordinary share capital, you always dispose or you repurchase the shares at the average price. In other words, look at it. 80,000 shares repurchased during the year. The average issue price was 5 Rand and 80 cents, and I went into an explanation showing you how we got the 5 Rand and the 80 cents. So therefore, if we take our 5 Rand and 80 cents, multiply it by the 80,000 shares that we repurchased, and our answer will therefore be 464,000. There it is. So you can clearly see that when you're working in this note here, you always work with the average price of the shares. Why? Because the average price of the share is what is indicated in my ordinary share capital account. Okay, another interesting point of all of this here is you are now left with the 420,000 shares. Obviously, 500,000 minus the 80,000 to give me a value of 420,000 shares. What is that? The number of shares that are left over. And watch something very interesting. The value of these shares, after you've subtracted the 464,000, is a value of 2,436,000. Okay, let's just do an exercise here. If we take 2,436,000 and we divide it by 420,000, notice that my value will remain constant at what price? At 5 Rand and 80 cents. In other words, after the repurchase of the 80,000 shares, we find that the average issue price of the 420,000 shares remains at 5 Rand and 80 cents. So keep this in mind when you are doing this calculation. Right, let's move on to the next one. Now, obviously, in my next note, we're looking at the retained income. We start off the retained income with my balance at the beginning of my financial year, and that is obviously a balance that is given to you in your trial balance or given information. We then bring in our net profit after tax for the year. Obviously, this information is coming from your income statement or your statement of comprehensive income. That's the new terminology. Get au fait with it, because sometimes if the question talks about a statement of comprehensive income, they're in fact referring to the income statement. It's one and the same thing. Right, so that's my net profit after tax. Keep that in mind. After tax for the year, which is equal to an amount of 840,000. Now, you notice something else in this note here. The shares that you repurchased, right? Obviously, you had repurchased those shares for more than the average price. And therefore, that portion above the average price is what you will show in your retained income note. So, if we go back and we look at that, what was the average price of those shares that we repurchased? Was 464,000. Okay, let's do that. 464,000 was the average price. Add, okay, and let's find the price above the average price is 160,000 plus, let's add the 160,000. So in other words, you can clearly see that we had repurchased those shares for a value of 624,000. And now the split takes place. The 464,000 appears in my ordinary share capital, whereas the 160,000, this one here, appears in my retained income note. And also, it proves to you that that portion of the retained income on those particular shares have been in your retained income account, and as a result must now be removed. So you can see we subtract the retained income portion of those shares. So once again, grade 12s, let me illustrate, let me show it to you in terms of the breakup. One portion, the average price in the ordinary share capital, and the price above the average price would appear where? In my retained income note. Then what do I bring in? I now bring in my dividends. Remember, the dividends are two. Normally in a company, we have the interim dividend, which is declared during the financial year, right? Obviously, the question will lead you on as to how the interim dividend needs to be calculated, or the information may be given to you. What is important is that the second dividend is my final dividend, and that one also, the question will give you information regarding how to calculate that final dividend. What is important for you is to elicit information and thereby use that information to do the necessary calculation. So watch, I bring in my interim dividend, in this case 120,000, and my final dividend of 231,000. Add the two dividends together to give me a total of 351,000. So I've got my balance at the beginning of the year, right? I add my net profit after tax. I subtract the retained income portion of those shares that have been repurchased. I subtract my dividends, and voila, what am I left with? I'm left with my retained income at the end of the year. Now, these two figures, which two? My ordinary share capital plus my retained income, will then make up my ordinary shareholders' equity. So in other words, what are we saying? We are saying that shareholders' equity is made up of two components, and those two components are my ordinary share capital plus my retained income. So these two components added together will finally give me my shareholders' equity. Keep that in mind. While we're at it, just a quick recap on how do we deal with our retained income at the beginning of the financial year. And I'm going to show you three methods. Number one, there's my retained income at the beginning of the year, an amount of 600,000 as an example, right? I'm going to show you the second method, also a retained income account, and I'm going to use the same figure for all three examples. So now, this is what we do. In method one, and obviously for me, that's the preferred method. What do we do with retained income at the beginning of the year? Absolutely nothing. That means you leave it where it is, and whatever you find in your appropriation account after you've brought in your profit and loss, your income tax, your ordinary share dividends, whatever retained income you find in this account here, all that you do is you transfer that to your retained income account. So the opening balance in the retained account, in the retained income account, remains a constant. You don't do anything with it. Okay, second method, also acceptable, and I'm going to change the color so we see a different method, is you take the 600,000, notice that you transfer it to your appropriation account, 600,000, and then in your appropriation account, after you have your profit and loss, your income tax, your ordinary share dividends, you have a new retained income figure which you take to your retained income account. So clearly you can see, you take the entire balance of your retained income, whatever it is, debit your retained income, credit your appropriation, that means you've transferred it, and the new balance after you've calculated, we take it back to your retained income. That's method 2. Let's now look at method 3. In method 3, you first bring about the repurchase of your share, and let's assume it was 100,000, okay? Then the balance between the two, the 600,000 minus the 100,000, is an amount of 500,000. That you then take to your appropriation account as retained income, 500,000. What do you bring in here? Obviously, your profit and loss, your income tax, your ordinary share dividends, and your retained income would then be a new figure which you take back to your retained income account. Now, grade 12s, I've shown you 3 different methods. Method 1, to recap, you do nothing with that amount, you leave it where it is, calculate your figure in your appropriation, and transfer it back to retained income. In method 2, you transfer the entire amount to your appropriation. There you can see your transfer, and your new figure that is calculated in appropriation is transferred back to retained income. And in method 3, you first do the buyback of the share, the difference you take to your appropriation account, right? Then recalculate and take back to retained income. Like I've told you, the choice is entirely yours. The preferred method, my preferred method, is method 1. If you can do method 1, you A for away for the exams. How does this information impact on my cash flow statement? Remember, and this is critical, when you are doing the cash flow statement, under your financing activities, you have 3 items. One is your proceeds of shares that were issued. Can you recall? We sold more shares, right? That is a proceed. We are receiving money. And how much did we sell those shares for? We sold them for 1,400,000. Now, when we come to the second part of this note here, we're looking at the repurchase of the shares. The question arises, and often candidates ask, what amount do we show in the cash flow statement? And my answer is very simple. How much did we pay for those shares that we had repurchased? Remember, the average price, you recall from the explanation earlier, there's my average price. The price above the average price, clearly you can see the total value of the monies that left our company was an amount of 624,000. So therefore, in the cash flow statement, you will show both the average price plus the price above the average price. Because in reality, grade 12s, how much left the company? How much of money left the company? Yes, we repurchased the 80,000 shares, but how much did we pay for it? We paid 624,000 Rand, so that's the amount of money that left our bank account, okay? And thirdly, you bring in your proceed of the loan received, but remember, it's not always a proceed. It could always be a repayment of the loan, which would then be shown in a bracket. Remember what I've said, in a cash flow statement, keep this in mind. Always show your outflow with a bracket. Why? To show that the funds are decreasing and inflow is a positive and therefore no bracket. An exam tip for you, keep this in mind, no bracket, no mark. Right, now that promised break that we alluded to earlier on, have a quick break, refresh, and we'll see you in a jiffy. Welcome back, grade 12s. Learn extra. We're going to make a difference to that accounting result. I'm sure you're refreshed after the break because we're going into a question that deals specifically, as you can see, with the repurchase of shares and certain interpretation, because very often when it comes to interpretation, then you shy away from it. But the place to be is with us because we're going to show you how to go about answering questions that affect the repurchase as well as interpretation. Right, let's get into the question. What is expected of us? Always read the question, so you know exactly what do the examiners want from me. They want you to show, one, the shareholders' equity section of the balance sheet for 6 marks. They want notes for the ordinary share capital and the retained income, and then you'll notice a calculation for the net asset value, and then some theory and interpretation questions. Why did they sell the shares? We will get into those questions as and when we progress through the lesson. Right now, let's get right into the first bit of information and see what have they given us. We are told, and yes, you do remember what Ashraf always says, RTFQ. Read the full question because it gives you exactly what is required. Right. With regards to my ordinary shares, I am told the ordinary share capital on the 1st of April, which is the beginning of my financial year, it consisted of 250,000 ordinary shares issued in the 2010 financial year at 5 Rand per share. Right. So therefore, when I go to my, what note am I doing? Remember, I'm doing my ordinary share capital, and this obviously is my extract of my balance sheet, right? But remember that I cannot complete this balance sheet until and unless I've done the notes to my balance sheet. Okay, so please be careful. You can't complete this note. Why not? Because you got to do the entire note first, because from here you will see that having done this share capital note and the retained income note, then we can go back and complete the face of the balance sheet. This leads to another examination tip. Before you start off with the face of the balance sheet, make sure that the notes are completed. However, sometimes you find that you have to complete the note on the face of the balance sheet. That is something else and requires some bracket work. But in this particular case, we have to start with a note for my share capital, and I would start off with, remember we said that at the beginning of the year we had 400,000 shares. Now, where does that come from? Let's look at the breakup. Why am I saying 400,000 shares? Because it's 250,000 shares that were issued in the 2010 financial year at 5 Rand per share. Therefore, if we take our 250,000, multiply that by 5, will give me a value of 1,250,000. Therefore, notice here, I open my bracket and I say 1,250,000 Rand plus the second component that I have to bring in would be the other shares. Remember, there were other shares that were issued as well. There's the 150,000 shares, and these were issued at 7 Rand per share. Therefore, 150,000 shares times my 7 Rand, which was equal to 1,050,000. Therefore, let's go to where we are working. 1,050,000. Remember, so in other words, what am I doing here, grade 12s? I'm showing the breakup of the 400,000 shares. Remember, these were at the beginning of my financial year, right? And I'm showing the breakup because remember, there was not one issue of shares, there were 2 different issues of shares. And therefore, the total value of these shares, if we add it together, will give me a figure of 2,050,000. 300,000. Where's the 2,300,000 coming from? Clearly you can see here that you had the 1,050,000 plus the 1,250,000. Okay, to give me a figure of 2,300,000. Now, that would be the value of my shares at the beginning of the financial year. Right. Another important examination tip. We give you a lot of examination tips. Show the breakup, because you could get part marks being allocated for those calculations. In the event of you making a mistake with one, you could still get some part marks. Right. What happened? During the year, the following changes occurred to share capital during 2013 in the financial year. Right. Now, what happened? On the 1st of October 2012, 100,000 new ordinary shares were issued at 9 Rand per share. Okay? So, let's go back now and say, fine. During the year, what happened? We sold a further 100,000. We have 100,000 shares. Okay? And these 100,000 shares, remember, they were sold at how much? They were sold at 9 Rand per share. Therefore, we indicate that on our information and we say 100,000 shares sold or issued during the year. Right? And remember, they were sold at 9 Rand to give me a value of, if you multiply the 100,000 by 9 Rand per share, to give me a value of 900,000. Okay, simple calculation. We don't have to pick up our calculator for that. Right, so this happened when, guys? During the year, during this financial year. These were my balances at the beginning of the financial year. During the year, a further 100,000 were issued at 9 Rand to give me a value of 900,000. Okay, what else transpired? Important information, these shareholders, who, the new ones, at 100,000, are not entitled to the interim dividend. We'll get back to that calculation. But important, flag it, make a mark and say, I need to work on this information. When I'm going to do my dividends, this is going to have a direct bearing on it, so keep that in mind. Right, regarding the shares, on the 31st of March 2013, the directors decided to repurchase 220,000 ordinary shares from members of the GUP2 family who were no longer interested in being shareholders. Right? So they don't want to be shareholders, so we are buying back, we are repurchasing those shares. Now, these shareholders had originally bought most of their shares on the JSE at different prices. Important. And at different times. So there's not one specific time when these shares were purchased from us. However, the repurchase price was 10.70 Rand per share. That's the amount of money that we paid them. That's the value of the shares that we paid them. We bought those shares back at 10.70 Rand. These shareholders are entitled to all dividends for 2013. Again, dividends, important, flag it, we will come back to it. Let's look at the repurchase specifically. Right, now, how many shares did we repurchase? We repurchased 220,000 shares. So, there's my 220,000 shares that I'm repurchasing. But now the question arises, do I show the 10.70 Rand? No. Why? Because that was the total price of the shares that we repurchased. What do we have to calculate? We have to calculate the average price. That's right, the average price. Let's do that. 2,300,000. Is that right? Okay, 2,300,000 plus the 900,000 to give me a value of 3,200,000. That's the rand value of those shares. Okay, now divided by what? How many shares are represented? Can you see? It's the 400 plus the 100 to give me a total of 500,000 shares. So therefore, we say divide that by 500,000 and your value would be 6 rand and 40 cents. What is the 6 rand and 40 cents, grade 12s? That is the average price of my shares. Therefore, when I repurchase these 220,000 shares that I'm repurchasing, remember, these shares will be repurchased at what price? At 6 rand and 40 cents. And I showed you the calculation for it. What was it? Once again, the value, the rand value of the shares divided by the number of shares. Therefore, the 220,000 at how much? At 6 rand and 40 cents per share. Therefore, let us do our calculation now. And we say times the 220,000 to give me a value of 1,408,000. Okay, 1,408,000. That is the value of the shares that we have repurchased. Okay, there's it. Notice we are repurchasing it, so that figure has to appear in a bracket. Okay, let's complete that note by taking the following into account. It's my 2,300,000 plus the 900,000, okay, minus 1,408,000 to give me a value of 1,792,000. 1,792,000. Now, grade 12s, what is that? That's the value of my shares that are left over. And how many shares are left over? Watch, it's 280,000 shares when at the end of my financial year. And just one more thing, just to set your minds at ease. Let's just do another extra calculation here. Watch this. 1,792,000 divided by the 280,000 shares which are left over, and it gives you a value of 6 rand 40. Voila, showing you that this price of these shares would be the average price, because that's what's remaining. Remember, the remainder of the shares would stay at the average price. Okay, that's my note. Which one? Ordinary share capital, done and dusted. And yes, if this counted for 13 marks, we've got 13 out of 13 for our note to our ordinary share capital. Right, let's move on to the note for the retained income. Obviously, you start off with your balance at the beginning of the year. Let's identify that information. My retained income on the 1st of April, beginning of the year. Your dates are very important. Dates are important in your lives, aren't they? Yes, I'm referring to dates that you eat, which are very nutritious. And yes, the dates in accounting are also critical. You have to identify, am I given the beginning of the year or the end of the year? In this case, beginning of the year, 1,960,000. Let's slot it in. So 1,960,000 is my balance at the beginning of my financial year. Right, then what do I have to bring in? I have to bring in, you recall your note, net profit after tax. Okay, let's find that information. Where's my information? I need my, there's it. I'm working for the year March as my end of my financial year. There's my net income after tax, 1,600,000. So therefore, 1,600,000 is my net income after taxation. Just a bit of explanation on this net profit after tax. Sometimes the examiners may not give you that figure, and therefore you are expected to calculate it. Okay? So keep this in mind. There are various ways in which you can calculate that figure depending on the information that is given to you. And sometimes, just sometimes, you'd find that you may have to redraft an appropriation account. Yes, so know your appropriation account. You'll notice this appropriation account, as we alluded to in the segment earlier, what did you say? Profit and loss, income tax, ordinary share dividends, and your retained income at the end of the year. You may have to use this account to calculate your net profit after tax. Keep that in mind. Sometimes you may also have to do a calculation where you are given the tax rate, and based on the tax rate, you have to use that to calculate your net profit after tax. All that I'm doing here, grade 12s, is showing you various options when it comes to the examination. In this particular question, the examiners were kind to us. They gave us the net profit after tax, 1,600,000. Right, next one. What do we now bring into the retained income note? We're bringing in our repurchase of shares. Why? You can recall, I'm sure you can recall, that the price above the average price, yes, that price was what we had retained and therefore must be removed from our retained income account or our retained income note. Now, how many shares were repurchased? 220,000. Do you recall the repurchase price? Let's just refresh our memories. These shares were repurchased at 10 Rand 70 per share. So therefore, watch. So 10 Rand 70 minus 6 Rand and 40 cents to give me a price of 4 Rand and 30 cents. Multiply that by 220,000 to give me a value of 946,000. Okay, so let's show that information there. Remember the 220,000 we said at how much? The price we said was 4 Rand and 60 cents. If you remember the calculation, let's just refresh our memories and check the calculator. It was, let's do that again, 10 Rand and 70 minus 6 Rand 40, and my answer is 4 Rand and 30 cents, sorry. So the correct amount is 4 Rand and 30 cents. Now, times 4 Rand and 30 cents, multiply that by 220,000 to give me 946,000. 946,000 is what, grade 12s? Is the price above the average price. And that portion comes out of my retained income. There you got it. As you can see, we are subtracting. Right, let's continue with this note here. Now we need to bring in our dividends. And with regards to our dividends, remember there were two dividends. the interim dividend and the final dividend. Okay, let's get back to our information. What do we know regarding dividends? We are told that the new shares that were sold, the 100,000, these ones here, what about them? These shareholders are not entitled to the interim dividend. In other words, only the old shareholders. And who are they? If you remember correctly, looking at this here. So there's the 250,000 that we had at the beginning of the year, plus the 150,000. So in other words, these shares were in existence during the financial year. And as you can clearly see, that was a total of 400,000 shares. Therefore, let's do our calculation. And our calculation is 400, 1, 2, 3, multiply by what was the interim dividend. Let's find it. The interim dividend was, in terms of my information, the interim dividend was 70 cents per share. Therefore, multiply that by 7 to give me an answer of 280,000 rand. What is the 280,000 rand? Remember, the 280,000 rand is my interim dividend. 280,000 rand. Once again, the calculation was 400,000 shares multiplied by 70 cents, which was the interim dividend. The question that you may ask is, what about the 100,000 shares that were sold? I showed you that they were not entitled to an interim dividend. Then the question you may ask, what about the repurchase? The question said specifically, with regards to the repurchased, they were entitled to all the dividends for the year. Keep that in mind. Okay, now going to our final dividend. And in terms of our final dividend, let's go to our calculation. Remember, the final dividend is now how many thousand shares? Let's look at it. It's the 400,000 at the beginning plus the 100,000 that we sold. Remember, the repurchase are entitled to all the dividends. So we work on 500,000 shares. So there's my 500,000 shares multiplied by what was my final dividend? Let's find it. Here is my final dividend. 102 cents per share. Therefore, let's do our calculation. 500,000 times 1,02, which is 102 cents, to give me a value of 510,000 rand. Okay. So, there's my 510,000 rand. Remember, times 1,02, which was my final dividend. Okay, let's complete this note here. Let's add the two dividends together. It's the 510,000 plus the 280,000 to give me a total of 790,000. So 790,000 is my total dividend for the year. Right, we can now complete our note by starting off with my balance at the beginning of the year, which was 1,960,000, okay, taken into account, plus the 1,600,000, which was my net income after tax, 1,600,000, right, minus 946,000. Remember, that was the buyback of the share minus my 790,000, which was my total dividend for the year. And my answer is 1,824,000. 1,824,000. Voila, grade 12s, we're done with the notes. But remember, we needed this information to complete something else, isn't it? Can you recall? Yes, the question said, show the extract from the face of the balance sheet. Right, now what is the extract? In here you have your ordinary share capital. Once again, you'll notice, okay, let's just change this here. That's supposed to read ordinary share equity. And ordinary share equity has two components. It's your ordinary share capital plus your retained income. Now, once again, just something you notice, I'm abbreviating. Remember what Ashraf always says, guys, I have a license to abbreviate. You do not have. So make sure in the exam that you write it out in full. You don't want to lose marks because you just didn't write in the words ordinary share capital. Make sure that you write it out in full, because you will notice that in some cases marks are given or allocated to detail, and you do not want to lose that marks, do you? So make sure you write it out in full. Right, what was my ordinary share capital? If you recall, we completed that note, and my ordinary share capital was 1,792,000. Therefore, 1,792,000 was my ordinary share capital. And what was my retained income? Let's get to our retained income. Our retained income was 1,824,000. Therefore, let's slot in that figure, 1,824,000. So these two figures added together would be plus 1,792,000 to give me a figure of 3,616,000, and we are now done and dusted with the note, the face of the balance sheet as well as the notes. Okay, but we have some theory questions. Let's answer those questions now. Now the question said, calculate the net asset value per share. Now remember, excuse me, the net asset value per share is your ordinary shareholders' equity, right, divided by the number of issued shares. And you're going to express this as not as a percentage, sorry. Your net asset value per share is always expressed as so many cents per share. So therefore, you multiply it by 100 over 1 because there are 100 cents in the rand. Okay, now we need our ordinary shareholders' equity, and we just completed that note just now. So let's get that figure. That figure, remember, appears in my balance sheet, and obviously important is that it's going to impact directly on your question. So in other words, because you are doing the net asset value from your calculation, per chance, if you got this figure wrong, but you use that figure in your calculation, you're definitely going to get the marks for it. Right, but we're not going to have that situation. We're going to ensure that we get it spot on. 3,616,000. Okay, so 3,616,000, which is my ordinary shareholders' equity divided by, do you recall the number of shares that we have issued is 280,000. Again, this comes from your note, your shares at the end of the year. Let me show it to you. There's it, 280,000 shares at the end of the year. Remember, because we had 400,000, we sold 100,000, and then we repurchased 220 to give me what we got left, 280,000. Okay, so this means therefore that you divide that by 280,000, multiply it by 100 over 1 because you want to answer in rands. So we got that divided by 280,000, and you want your answer as cents or in rands. In this case here, your answer is 12 rand, 91. And obviously, depending on the rounding factor, how many decimals they want you to show, 12 and 91 would suffice. That, grade 12s, is how you calculate your net asset value per share. Remember something else, that if you had shown this answer as so many cents, let's do that, multiplied by 100, and if you had showed that answer as 1,291 cents, let's write it down as well for you, 1,291,4. Okay, let's leave out that decimal, but the exact point that I'm trying to make here for you is that was the rand value. You could have given the answer in cents as well. In both cases, the answer would be accepted. Okay. Now, the theory question. The Gupta family were keen to sell their shares because they were unhappy with the low payout policy that the directors were using in deciding on dividends. In your opinion, are their complaints valid or not? Please explain. Okay, now, obviously, you got to look at it in the context of the question. Firstly, they were unhappy with the low payout policy. Now let's look at the payout policy. If we look at our information, let's find our information. This information is important to us. We find that in this year, namely 2012, you had earnings per share of 488.9 cents per share, right? And you also find that of that figure, the company paid out in terms of dividends 230 cents. Obviously, I'm adding the 140 plus the 90. So in other words, what are we saying? We are saying that 230, right, times 100 divided by 488.9, and this gives you a figure of plus minus 47%. Now, if there was a payout of 47% in 1 year, right, which was 2012 year, let's look at the 2013 year and see what information we can get for 2013. With regards to 2013, again, add the two dividends, 172 cents per share in total, here's it here. And if we take the 172 cents, 172, right, multiply by 100, because I want to express as a percentage, divided by 356.6, which is my earnings per share, is equal to, almost 48%. This means therefore that surely the Gupta family have no reason to complain. Are their complaints valid? No, their complaints are not valid. Why? Because we have given a return in 1 year of 47%, which is an excellent return if you compare it to market value. And secondly, in the second year, the return was the dividend payout as a percentage was 48%. Again, no reason for them to complain. Clearly, what is the company doing? The company is retaining profits. And why are they retaining profits? For future expansion and growth. Clearly, you can see that the Gupta family wants more, and therefore this investment does not suit them. Obviously, the right thing for them to do is for the company to repurchase those shares and for them then to look for an alternate form of an investment. Okay, next one. Have the Gupta family been offered a fair value for their shares? Please explain. Remember, these shares were sold to them at, let's get the figure, I think it was 10 Rand and 70 cents. Okay, there's it, 10 Rand and 70 cents. Okay, so let's keep that in mind, that they'd received 10 Rand and 70 cents for their shares. Now, if you recall that the average price of these shares were what? We don't have to do the calculation. Why? Because we've done the calculations already. You see how important it is? There's it, 6 Rand and 40 cents was the average price of those shares. Therefore, keep that in mind, that the average price was 6 Rand and 40, so already they're getting more than the average price. And secondly, what else do we take into account? Take into account that the market price of the shares was 10 Rand and 40 cents. Okay, so market price 10 Rand and 40 cents. So see what I've done here for you, grade 12s. I've got the average price, I've got the market price, and the price that the Gupta family had been offered. So clearly, they should be satisfied. Why? Yes, certainly. It was more than the average price. It was greater than the average price. And yes, it was also more than the market price. So if they had sold their shares at the market value, they would have only received plus minus 10 Rand 40. But they received 10 Rand 70. Therefore, you can clearly see that they've received more and they should definitely be satisfied. Right, the next question. In your opinion, will the repurchase of the shares from the Gupta family benefit the remaining shareholders or not? Explain. Okay, now this is a question that requires insight. So please pay attention. Number one, our net asset value per share, which we calculated, if you remember correctly, let's refresh your memories to show you where we calculated our net asset value per share. There it is, was 12 Rand and 91 cents. Excuse me. So the net asset value per share was 12 Rand and 91 cents per share. Keep this in mind, that because we only now have 280,000 shares, it is having a positive effect on the remainder of the shareholders. What does this mean? Let me give you a very simple example to illustrate this for you. If I'm distributing a cake or a pizza into 4 pieces, then each person is receiving a quarter, correct? So if there are 4 people sharing the pizza, each one is receiving a quarter of that particular pizza. But if 2 people are taken out of the equation, now, same pizza, that's assuming it's the same pizza, size remains the same, but only 2 people are sharing and each one would get a half of that pizza. So, my pizza example will lead us on to the explanation. Because we have fewer shareholders remaining, it is definitely going to have a positive impact, and this will also affect the price on the Johannesburg Stock Exchange, or the Johannesburg Securities Exchange. That's what it's called now, right? The Johannesburg Securities Exchange. And also, it would have a positive impact. As you can see, the NAV already increased from what? From 11 Rand and 94. Now, the question arises, where does 11 Rand and 94 come from? Let's take this example further. And if we say that if the repurchase of the 220,000 shares did not take place, what would have been our shareholders' equity? It would have been 3,200,000, right? Plus the 2,770,000, okay? To give me a total of 5,970,000. Okay, now, this 5,970,000 would then be divided by, remember the shares, there was a total value of 500,000 shares. That's the number of shares. And this would then give you the 11 Rand and 94 cents as the net asset value per share if we considered that the shares were not repurchased. So therefore, what we are saying is that if the profits had remained the same at 1,600,000, remember the net income after tax, and then if you divided it, you would find that your earnings per share, which is equal to the 1,600,000 divided by the 280,000 shares, and you'll find that your earnings per share would now move to, what would it move to? 571,4. Right. Let me just do that part again for you. If you take your earnings per share at 1,600,000, let's assuming it stayed the same, it did not change, right? The net income after tax. And if you divided it by 280,000, which was what? Your number of shares that you had, 280,000. So, if you divide that figure, you would get a figure of 571.4 cents per share as what? As your earnings per share. Clearly you can see what is happening. Looking at my information, you can clearly see that. What impact is it having on my earnings per share? I can see that my earnings per share would then increase, therefore having a positive impact on the Johannesburg Securities Exchange, on the market value of those shares, and definitely it would benefit the existing shareholders. Well, grade 12s, that's the end of our lesson. I hope after this you have a clear picture of the buyback of shares and also the cash flow statement, the notes to the balance sheet, and everything pertaining to shares. From me, Ashraf Patel, like I always say, guys, aim for the moon, because perchance if you don't land there, definitely you're going to be one of Ashraf's shining stars. Until the next time, practice your accounting and A for away. Goodbye.